The Bank of Russia is holding a virtual conference this week focusing on the post-coronavirus economy and the challenges that it will create. So far, the Russian economy has weathered the pandemic better than many economists had predicted, with key industrial sites remaining open. However, the second wave is hitting the population hard. So is there need for further fiscal or monetary stimulus at this point? Joining me now from Moscow is Elvira Nabiullina, the Bank of Russia governor. Governor, thank you very much indeed for your time today. We greatly appreciate it. Good evening. Let's talk about where the Russian economy is now. As I say, many economists thought that it would do worse than it is doing. It's doing better because many of the industrial sites have remained open. Yet the second wave is turning out to be tough. Do you think there is a need for further fiscal or further monetary packages to help the economy?
Thank you for having me. Indeed, Russian economy showed better dynamic than many expected because of many factors, the structure of the Russian economy and the quick and efficient response from the government and central banks. And from the point of view of the central bank, on the one hand, we still think that space for additional accommodation remains. Recovery is not is incomplete yet, and it means that disinflationary risks can prevail next year. And the delay of the recovery due to the second wave of COVID-19 pandemic adds to this disinflationary pressure. On the other hand, inflation accelerated in the last 2 months. We see more one-off factors in that. First, it's currency depreciation in late summer and autumn. Second, it's increased demand for basic staples in self-isolation. And third, supply side constraints due to pandemic-related restrictions. But we need to assess carefully these factors. Are they really temporary, or they will have long-lasting second-round effects, especially through elevated inflation expectations? I can say that after 350 basis points rate cuts since last summer, we are already close to the trough of the key rate cycle. But nevertheless, we expect that next year monetary policy remain accommodative and will support Russian economy.
Okay, let's talk a lot about what you've just said. What is your best guess about whether or not the current inflationary surge we're seeing, and the November number was above your 4% year-end target, your best assessment as to whether or not this is temporary, or whether, as you say, the second round effects make it a little bit more permanent? What is your assessment currently? Our assessment, it's more one-off factors, temporary, with temporary effects. But we need to assess it carefully because we have concerns about inflationary expectations. They increased quite significantly after the spikes in inflation during spring period of pandemic, and now we see these figures. And the magnitude of inflation acceleration is quite material. And our inflation expectations are not well anchored because we started inflation targeting quite relatively soon in comparison with other countries. That's why we should be very careful and to assess all the data, coming data, and to take decisions, make decisions. Okay, let's talk about those decisions. On Friday, you are going into your blackout ahead of the 18th, which is your decision that you're going to make on whether or not to cut rates. You've just told me that you think you are near the trough. What is the balance of risk, do you think, going into that meeting on the 18th, given the data that you have described? Where are you going into that meeting? Which direction do you think you will take us?
Of course, we make our decision based on our forecast for next year, because all monetary decisions, they act with some lag in the time. And we think that disinflationary pressure will prevail because of this worsening of pandemic situation, and we see that demand in the economy is recovering, but it has not recovered yet fully. And different sectors, they respond differently. And we see that many service sectors, they suffer from this situation. That's why we see more that disinflationary factors will prevail. Of course, we will consider all how the situation will develop. Especially, we think that we will see somewhat flat growth trajectory in the fourth quarter this year and the first quarter next year. Then we think that recovery will resume. And now we expect that we will reach pre-pandemic mark in terms of economic by the first half of 2022. That give us some space for additional easing, but it depends a lot on many factors. We know that the situation is characterized with high uncertainty.
Yep. Okay, you talk about that uncertainty. Is it therefore better to wait until next year before you use the ammunition that you have left? Or do you think it would be wiser to use it kind of earlier and therefore gain instant kind of reaction within the Russian economy?
We will assess all these factors and what prevails during our monetary policy meeting. But I can say that we see now the effects of the previous rate cuts. I've said that we cut rates by 350 basis points already, and we see this effect on the economy is continuing, and it will continue next year. That's why it's very early to predict our decision this month's meeting.
There are some that suggest that maybe next year we see hikes from the bank. Sovo Capital is one of those that is talking about potential hikes. There are others within the economists that look at the Russian economy that think that we will see many more cuts. You've kind of talked us through your thinking. Do you worry, though, that there are such diverse opinions within the economics community about what is happening in terms of your direction of policy?
Indeed, we see these differences in opinions, and I think it's quite natural in these circumstances of great unpredictability. But we see that next year monetary policy remain accommodative, and we still some space for that. But very modest space. I've said that we are very close to the trough of this easing cycle. And we will act based on data. We try to explain to our markets our logic and our reaction to factors, which factors are more important, which are less important. We don't conduct the policy of forward guidance in the sense of many other central banks in advanced economies. We think we should be more flexible now.
Governor, the Biden administration in the United States, when it arrives at the beginning of next year, will be tougher probably than the previous administration of Donald Trump. It will certainly be as tough, it certainly seems, judging by the rhetoric. Have you factored further sanctions into your economic models, into your thinking?
You know, in the baseline scenario, we at the Bank of Russia assume unchanged status quo in bilateral relations with the United States and sanctions regime. but we realize the risks of escalation of geopolitical factors, and we include this possibility of escalation of sanctions in our adverse risk scenario analysis. And the main thing that we should be prepared for different scenarios, even very negative scenarios. That's why we are keeping our buffers quite high. We're very cautious about and we're very conservative in our policies, and we have a toolkit of instruments to deal with financial stability risks. And I think the low level of public debt, even after the increase in public debt this year related to pandemics spending, fiscal spendings, the level of government debt is quite low. It is not more than 20% of GDP, and we can use our conventional tools to ease monetary policy if it's needed, because our key rate is far away from low effective bounds. It's 4.25%. That's why it's very important in these circumstances to have all these instruments to react if the situation can worsen.
Last question, Governor. The Finance Ministry has indicated that we may be past peak demand for fossil fuels. Would you agree with that? Do you think we will ever get back to pre-COVID levels of demand?
You know, oil prices are tracking now somewhat higher than we expected. And this is notwithstanding the worsening of the near-term outlook for petroleum demand due to the drop in mobility amidst the second wave of COVID-19. But we recognize that the longer-term trend for high energy efficiency, less use of fossil fuels, and that trend can be amplified by the sustained decline in mobility in the post-COVID world. Who knows? And that's why we stick to our conservative assumption of oil prices. We think that they will be not above $50 per barrel.